disentangle ourselves from the crypto casinos. Right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, these have been painful events, and Bitcoin is cross-collateralized, and they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, I didn't have a penny on FTX. I wouldn't invest a penny in FTT, right? I mean, from the very beginning, if people that have any business acumen or background, any legal sense, any ethical training, or any technical training in a university, if they would look at this, they would say, yeah, it doesn't make sense to invest in 20,000 random tokens that get spun out of nowhere that trade on an opaque offshore exchange with nearly infinite leverage, right? Doesn't make sense, but it surprised me that so many otherwise intelligent people put so much money into these things.
Big institutions.
Why would a pension fund, why would a VC, investor, why would they put hundreds of millions or billions of dollars into crypto tokens and crypto exchanges, and why would they pursue these ideas in such an irresponsible fashion?
Many people are still talking about the FTX collapse and the master plan from Sam Bankman-Fried behind it. Many believe that there was an evil agenda behind this created by public investors and big names like Kevin O'Leary. In this video, Michael Saylor explained how this collapse affected Bitcoin prices in a way that most people don't even imagine. It's not just a matter of trust in the crypto space anymore. It's deeper than that, so pay close attention until the end, as this will be a powerful interview.
We go back to first principles. The entire Bitcoin movement got started because of a loss of faith in the currency and a loss of faith in banks. And so this has gone on since time immemorial. Banking crisis that froze customers' funds, and currency crisis that collapsed their purchasing power. And Bitcoin was created as a currency that couldn't be debased, running on an open network so you could be your own bank. And the principle is, if you're your own bank and no one has discretion to debase the currency, then you're not going to wake up one morning and find out that your funds have been seized and they've been devalued to zero. Crypto and the entire movement is almost like the reinvention of fiat currency and fractional reserve banking, but instead of it being in a regulated environment, it's just in an unregulated environment. So ironically, we saw the same human behaviors here. A human being creates a wildcat bank, unregulated. Then a human being creates their own currency, like the FTT token. Then they issue a bunch of it. Then they start to leverage it and borrow against it. And then at some point, they start to misuse the funds of their customers in their bank, and they use it to prop up their currency. Eventually, the currency collapses, the bank freezes its assets. People who had trusted the bank lose their assets. People who had trusted the currency lose their purchasing power. You can't trust a CEO, you can't trust a company, and you can't trust a custodian. And if there's a counterparty, it's credit, it's not money. And Bitcoin is nobody's liability. There is no counterparty. Anyone that joins the network is their own banker. The reason it's money is because no human being or no organization has discretion over it. So, and if anything, all of the Bitcoin memes have come back to life. Not your keys, not your coins. It's constant. And don't trust, verify. And it's sad to say that this is an incredibly expensive lesson in basic fundamentals of monetary theory and banking and a principled way forward with your investments.
Does Michael even think SBF knew what he was doing? In our previous videos, he said Sam had a diabolical plan behind everything and even adds this now.
I think he got caught up in this entire crypto wave, and it was much bigger than him, and everything happened very, very fast. And in this particular case, it's still not even clear to him what happened. He'll probably register this or figure out what happened some number of years afterwards. So I think the humility of Satoshi is the observation that no one can carry the burden of that trust. Satoshi can't, no company, no board of directors, no government, no political process. At the point that you conclude that no one has the strength of character and wisdom and commitment to carry the burden of a billion people's money, then you realize that the solution is put the control of that into the hands of nature. Submit yourself to nature's laws and to the laws of mathematics, and then put it into the hands of a software that's not just a software program running on a machine, but a software protocol running on millions of machines. Satoshi said something, very seminal at the very beginning of this entire movement. The root cause of all these collapses is the trust that is required, and that trust has been betrayed over and over and over again. The FTX collapse isn't the first collapse of a bank. It won't be the last collapse of the bank. And until human beings develop the humility to realize that trusting the bank and trusting a fiat currency was the mistake in the first place, then they won't transcend and evolve beyond this situation.
So, according to Michael, investing in these tokens and putting money inside centralized exchanges was a risk so obvious that educated people should never have taken it because they were similar to putting money in traditional banks. But he even goes further on this.
The most is fairly intelligent people and entities not realizing everything I just said to you fast enough, right? For example, it seems quite evident, right? If you were doing, I didn't have a penny on FTX. I wouldn't invest a penny in FTT, right? I mean, from the very beginning, if people that have any business acumen or background, any legal sense, any ethical training, or any technical training in a university, if they would look at this, they would say, yeah, it doesn't make sense to invest in 20,000 random tokens that get spun out of nowhere that trade on an opaque offshore exchange with nearly infinite leverage, right? Doesn't make sense, but it surprised me that so many otherwise intelligent people put so much money into these things.
Big institutions.
Why would a pension fund, why would a VC, investor, why would they put hundreds of millions or billions of dollars into crypto tokens and crypto exchanges, and why would they pursue these ideas in such an irresponsible fashion? And sometimes you almost want to tweet, like, people will literally lose $1 billion chasing after these crypto casinos before they'll put $1 million in Bitcoin. It's just fast money, borderline greed, I guess, that people with billions of dollars in education that should know better, when they're granted something which is ethically sound, technically sound, economically sound, and the first perfected money and the first, truly open, fair, decentralized monetary network in the history of the world, when they're staring at it, their reaction is, it's too boring. How do I take another crypto risk? And so I guess it just takes, these billion-dollar blow-ups of Celsius and Voyager and FTX for some of them to start to to get the idea that Bitcoin is the innovation, and they should come back to basic first principles.
So how concerned is Michael now about hard regulation coming to Bitcoin?
I think that a lot of the pain that the Bitcoin community has absorbed is because of the slow response of the regulators. If the regulators had moved faster, in order to, if they had moved more aggressively in 2018 or 2019, you wouldn't have seen all of these, crypto casinos spin up the way they've spun up. One of two things will happen with regulators. They will either move much more aggressively in a fairly regressive, conservative approach, and that means they'll just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary. Because in a conservative world, Bitcoin is the apex crypto property and the apex crypto asset, and people will simply hold it as a long-term store of value. And if the regulators said everything in the crypto ecosystem is now, forbidden, all you can do is buy Bitcoin and hold it and sell it at the end of its useful life, treat it like gold, Bitcoin would still benefit. Right? The other extreme would be the regulators act proactively, they act progressively, and they provide a path to registration of a digital commodity, a path to registration of a digital security, a path to registration of a digital token, a path to registration of a digital exchange. You have to file monthly statements, register with this, banking supervisor, and take on these responsibilities to have these reserves and abide by these guardrails. You can issue a stable coin. If they said that, if they said, okay, well, you want to issue a digital security, you have to do it this way, fill out these forms, and every month or every week or every quarter, this is what you do. Then what you would see is a collapse of all the true scams. You would see the VC that have been trying to launch these other things, they would have to go through a registration process. Now you would actually understand, and you have the full disclosure and transparency. Many entrepreneurs would say, this is too hard. You get the sense that some of them never bother to hire a lawyer or get a legal opinion, right? It's like, I have to pay for lawyers and accountants in order to be in the business. This is too hard. You'll see a rationalization. 99% of all the tokens will go away. You will see some stable coins. There's a bona fide need for a coin like a Circle or a Tether. The world wants it. Maybe not in the U.S., but outside the U.S., the world wants it. So I think you would see some of those. I think you would see some digital securities. I think you would see, you'd probably see actresses and musicians. They would say, hey, I'm going to issue my, Katy Perry token, right? But they would do it with a lawyer in the compliant, ethical way because they don't want to risk their reputation.
And finally, this is a harsh truth on how Bitcoin has been suffering from these collapses way more than people think.
If we were able to disentangle ourselves from the crypto casinos, right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, these have been painful events, and Bitcoin is cross-collateralized, and they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, at the end of the day, if you simply said, you're not a commodity unless you're an asset without an issuer, it would knock out the top 50 coins other than Bitcoin. And every institutional investor would say, I get it, Bitcoin is special. Bitcoin is a commodity. Ethereum, Solana, Ripple, name every other coin that ever had an ICO, every coin that ever had a pre-mine, every coin that has a centralized foundation, a management team. Every other coin would be deemed as a security, and as a security, they would all have to make fair disclosures. When they made those disclosures, 95% of them would collapse. A few would be left, and people would say, well, this looks kind of like a tech stock. And then they go, well, maybe I like the tech stocks better. Probably they'll collapse.
Do you think Michael is right? Will most altcoins and these companies eventually disappear if proper regulation comes? Let us know in the comments below, and please leave a like and subscribe if you want to see more daily crypto videos like this. Thank you for watching.